What's good, everybody? Welcome to the closing beat. Sorry about a minute late there. You're just working hard and realize it's time to go, man. Got a show to do. Hey, this is our stock market update show, usually a little more refined than this, but up top you'll be able to see some of the indices, how they perform for the day. Commodities, bonds are all up there. International sort of markets are also up there. Below, we've got the sectors of the S&P. We've got some news that you may want to read through when you get a moment. This may be just a touch loud. I'm going to back it down for you. And off to the right, you can see the stock market's performance as far as the major indices go today, and a 5-minute chart, which is kind of interesting today. This is just a quick update show that we do for customers as well as you that want to participate. And if you have any questions, I'd be happy to answer them when I'm done. Let's dig in and get through all of this today. Look, our earnings season is basically over. We talked about this yesterday, that Walmart is sort of the official, not the unofficial end of earnings season, and things tend to get quiet after that. So if you notice the markets are a little bit quiet and not much happens there, then you really, as far as earnings go, you don't worry about it too much. It's kind of weird sometimes to go from being very, very active and a lot going on to nothing happening. So just know earnings season is basically over. The news and sort of the focus shifts back to geopolitical news as well as the Fed. And today, that's what we had. We had Fed news today. We got their minutes from their previous meeting where basically they showed they wanted to stop their balance sheet by the end of the year. I feel like I said that right. And then, of course, in the geopolitical news, you had the possibility of tariffs on the EU, Trump using that to sort of get them to the table. Remember, the European Union wouldn't negotiate with Barack Obama. Barack Obama tried to get them to sort of work out our trade imbalance, and they wouldn't even come to talk to us. So Trump's basically saying, hey, I'm going to tariff you guys too. Come on over here and let's start talking about this thing. It's like a $150 billion deficit or something. I don't think it's too crazy, but the man's going after it. Okay, as far as Fed news and rate hikes, potential rate hikes, investors basically have factored in right now an 82% chance that there'll be no rate hike, meaning all year long the Fed will just leave rates as is. Believe it or not, for some reason there's a 16% chance of a rate cut. I don't see that at all. It'd have to be just a horrible, disastrous, catastrophic, and I'll mention that in a second, year for them to do that. I don't know why it's 16%. And a 1% chance of them actually cutting rates, which I don't see that happening either. I think that's just a talking point for now. So that was in the news today. China, if you follow Chinese news overnight, their state-run media, cute, there's a little button, a little girl on there was saying that if we do these tariffs, the additional tariffs on China following the deadline, that it would be, quote, catastrophic for U.S. stocks. So there's that word for you. They do that sort of thing. It's kind of fun to watch. I watch this all the time just because, I don't know, I'm interested. But with all of that in the news today, you got a little bit of volatility towards the end of the day, all because basically, besides the Chinese news, the European Union news, as well as the Fed news, came out at about 2 o'clock. So if you look at the chart off to your right, you actually see a 5-minute picture of the chart of the S&P 500, and towards the 2 o'clock time period, see that volatile spike up, slam back down, and then back up again. That's your Fed news, and then they squeaked in that European Union news in there as well. And so because of that, it was a fairly active day. I don't want to say it was like ridiculously exciting or anything, but let's take a look. So if we go into the S&P 500, we talked about this last week and the week before, being stuck in no man's land. Anytime a stock is stuck between the 50 and 200-day moving average, where the 200-day is where one is above the other in sort of crushing down. I went through the whole explanation of that. They would call that no man's land, where it's difficult to make any new decisions. And so once we broke above that, that's your signal to say, okay, now we move on to the next resistance area. I drew it for you, and I've left it on here just so you can see. It's basically about the 2,800 to 28.25 area, and that's where the S&P 500 is moving, or continues to move to. Nasdaq, unable to really get above the 200-day. This is the Nasdaq 100, by the way. Unable to get above the 200-day moving average. That's the obvious resistance overhead. And the Dow, I believe now that's less than 4% until we get back to all-time highs. Yeah, we are less than 4% away from hitting all-time highs. Can you believe that? After this drop, right? Going back all the way to October. Oh, it's not going to show me. Go back from October all the way down here. On just the Dow alone, we lost over 20%. And just since the beginning of the year, We now only have 4% to go before recovering all of it. That's impressive. Anyways, we look at the Russell 2000. We've been talking about that one making its move towards the 200-day moving average. It is doing that, continues to do that. So index-wise, hey, all looking pretty good. I just loaded up in the dojo and just emailed it out. I think it's going to go out in about an hour. A video, I'm talking the stats, man. If you're into the geeky stuff, it's in the dojo now, but you'll see an email in a little bit about the S&P being overbought at this point. What does that mean? Well, how do we define it? How do we track it? Go back to 2007, show you all the different times where that happened, just so you can understand what does the markets typically do when we reach this point in time. I always do these studies. I love them. I love them. I love them. So be sure to check that out. It's in the dojo if you're one of our customers, available to you. Short, 5-6 minutes. Anyways, let's go on to the sectors here because we follow a pattern. We do the market indices, then we go through any sectors that are interesting on the day, and then we'll move on to individual stocks. So sector-wise, crude oil continuing to move out of our sort of comfort zone, we've been calling that here, this gray area. You got OPEC staying consistent with their cut in production. Mainly Saudi Arabia there. You also have Venezuela and Iranian sanctions that are starting to hurt supply overall. We got the crude inventory number that came out, the shale number that came out. It shows that we're really still pumping like crazy, so the U.S. isn't doing anything to help sort of lower the overall supply. We don't care. We want sort of world domination anyways with our oil prices. That's been a fight that's been going on for a while. Anyways, so oil continues higher, now up by 25% on the year, just this year. So standout sector there. Anything energy related, here's an ETF. This is the USO. This basically just tracks the price of oil in a direct way. You got oil explorers, decent day there. Oil holders or oil service companies, the guys that provide the services to oil companies, a little bit higher there as well. Great performance as far as the beginning of the year. So anything energy related did well. Semiconductors, I want to point out as well, they poked to new highs. That's been a standout sector. You need that to get the markets to continue higher. They have, you basically had like Broadcom today, which is no longer BRCM, it's AVGO. There you go. That broke to new highs there, so helping the sector. Intel was just a little bit, it was flat actually. It finished flat. Taiwan Semiconductors broke above the 200-day moving average. I'm basically just going through the top stocks in the semiconductor sector there. Taiwan Semiconductors was having a great day. It broke above the 200, was unable to close above the 200-day. So if you have that one, that bugs you a little bit. Other than that, I wanted to point out regional banks. They continue to do well, headed back to the 200-day moving average, and your large banks almost back to the 200-day moving average. Everything else, just a nice little positive day. To the downside there, sector-wise, there wasn't much. REITs pulled back, but can you blame them? Right? So REITs had not even a 1% pullback. At one point it was over 1%. But hey, they've done so well, you fully expect them to pull back, and you welcome a pullback if that's the case. So that's about all I have to say there. Let's move on to stock news, and then I'll take any questions if you have them, provided I know the answer. Garmin was your best performer in the S&P 500 today. That added 17%. This is the triple whammy, oh my God, great job, guys, earnings report. They beat on earnings by a mile. Did I write it down? $1.02 versus 80 cents a share. They earned $1.02 a share. We were only expecting 80. That's good. So that's a plus. Revenue better than expected, beat by a mile. They raised their guidance going forward. Awesome, right? So those three things that people look at, you add that to a stock that has been very strong already, and that's a recipe for a really strong rally there. Walmart. Mentioned yesterday, hey, the last 4 times the stock gapped higher, which is what happened yesterday, the last 4 times the stock gapped higher, it was not a reason to chase the stock. It actually pulled back. We showed a few examples. Here's the last one you can see on the charts there. Well, this time was no exception. Now, we own Walmart, so I didn't want to see it pull back, of course, but totally acceptable. Like, if you know what to expect, that video that's in the dojo where we talk about the S&P, all the data that I just put together, a little study I did for you guys. If you know what to expect, then when things happen, you don't care. You don't freak out. So Walmart, yesterday we mentioned you don't chase Walmart when it gaps higher on earnings. It's a proven losing trade. You'll get a better sort of pullback and opportunity. There you go. You got it on your Walmart there. So always good to see data, the stats coming true versus emotion. We don't want anything to do with emotion. Come on now. Well, all right, speaking of emotion, I don't want to always point out stocks in our portfolios that are doing well. I want to point out some of the ones doing bad as well. Here's the thing. CVS sold off 8% today. This is less than 0.5% allocation in our dividend fund. Nonetheless, it's in our dividend fund. It came back to these prior lows. I was sort of thankful that it did stay above these lows here. Pretty above average move for them to the downside. They reported earnings that were better than expected. Revenue came in short, and their guidance going forward, they said, hey, this long-term care business that we have is really dragging us down. It's going to hurt us for a little bit, and because of that, the stock took a little bit of a hit. Now, in our dividend fund, if you're one of our customers, no fear. The dividend fund gained 0.5% today, essentially beating out the overall stock market. That's not the goal, by the way. It just did that. Lloyd's Banking Group there had a great day. That was at the top of the list in our dividend fund. And Caterpillar, also one of the better performers in our dividend group, getting back above the 200-day moving average. So, you know, I like to point out the good with the bad. I'm not going to sit here and say everything's always rosy and perfect and all that stuff. By the way, the small cap fund on the day killed it, 0.85% on the day. And I keep pointing this out. That's your Russell 2000. That's this guy right here. Very, very nice comeback as far as the index, this particular index is concerned. So if you have the small cap fund, that's doing really well. Don't worry if you don't. There we go. Okay, back to news here. Tesla. A couple things. So Tesla, the news focused on the fact that they lost their top lawyer. It's only been 2 months since he's been there, and oh my God, nobody can work with Elon Musk. He's just as bad as Trump, and you get the whole idea. There was not a lot to talk about in the news today. Even cooler, I think, is that Tesla is going to start offering leasing options for the Model 3. So if you like the Tesla and you're like, yeah, I don't have the dough, man. I don't have enough money to buy one, and you want to lease one, they're going to start offering the leasing option to their employees, I believe, in the next 2 weeks and sort of expand on that. I know they have different plans at the moment, but they were trying to make that the headline today. It didn't work. Anyway, stock a little bit lower on the day. And then Apple, I don't know what this means. I'm not an Apple guy, so I'll leave it to you guys. They say that they're going to combine their apps for their iPhone, iPad, and the Mac all by 2021. Just pass that on to you. I don't use Macs in any way, so I have no idea what that means. Lending Club lower today, 6.5%, let's call it. They beat on earnings, missed on revenue, missed on guidance. Remember, that's the focus for this earnings season. We talked about that a long time ago. But that's about all I have for you there. If you have any questions, I'm happy to answer if I can. Other than that, I'm pretty sure I have covered everything I want to cover today. Fairly slow news day, by the way. So there you go. We do put the, I put the German markets, I put France, I put China, Japan, all up top there, just to give you a look at around the world. Just 'cause I watch those things. I don't know, if nobody's interested, I could switch them out to something else, but I like looking at those different things. But yeah, that answers the question there about putting different market indices. I like putting a S&P 600 up there. If I could find a way to get help and get that squeezed in there, I would put that in there. Yep. Typically what I focus on here in this naturally is going to be some of the market updates for customers that watch, but also some of the positions in there. I'm not allowed to actually just write it all down and say, here's what we have. Otherwise, I just put it on the website. But you can see the portfolios, and we have typed it out, the objective and the goals, in as transparent of a way so you could very likely figure out exactly what positions are in there. We do that intentionally. We're not allowed to actually post the positions that are in there and the weighting of the positions, but we were allowed to post an objective, and so that's why we tried to make it really clear so you guys get it. I'm one of those guys, I'm like, look, if you have a question, just ask me. If it's something that you think is private, I don't care. Just ask the question. I mean, naturally, I'm not going to tell you like my private life or whatever if it's a silly question. But if it has to do with the business or portfolios or anything, I want it to be where there's no question I can't answer. Sadly, some questions are regulated and we cannot. That's why you don't see other financial advisors doing anything like this on YouTube. They're scared. And I'm a little scared too, but I save and follow the rules, so it's all good. Please don't come after me, SEC. Cool. Palladium, new highs today. Yeah, very nice. It's a light market, right? Unless you're going to trade the futures directly, I don't know of any good ETFs. And by good, I mean liquid ETFs You've got physical palladium. Let me just look and see. Is there any volume behind that? Yeah, see, like PALL, there's not a lot of shares traded there. So if you're looking for an ETF to trade palladium, that's a tough one. You might have to man up and work your way to the futures market if it's suitable for you and anybody listening. Yep. Cool. Would transferring an Acorns account with fractional shares to Jazz Wealth be possible? We use fractional shares here too as well, so we can accept fractional shares. If it's a position for some reason, it's like a penny stock or something, chances are they're not going to allow you to have it in your Acorns account anyways. So any fractional share position, yeah, you can, as far as stocks and ETFs. We do fractional shares here as well. Very important, right? Because we're working with the beginners. Not everybody has $100,000 or whatever, so we want to be able to invest the same way. Had a customer put $25 in yesterday. Nope, 2 days. Yesterday, yeah. And fully diversified. Invested just the way they should. They wanted to test us out. I don't mind at all. And there you go. So short answer is yes, Benjamin. Do a video on fractional shares. It is a mathematical unbelievable cool thing. I mean, now we think of it, it's kind of like a drum solo. You guys musicians, anybody ever watch, like, you're into music? You watch a guy play a drum solo, and I watch it and I play the drums. So I'm like, yeah, I could do that. But could I have created that? Could I have dreamt that up and worked through the process to make it happen? Absolutely not. I would have to steal the concept from them. So fractional shares to me are super impressive because of how they were created and how they work on the back end. Now that everybody knows how it's done, it sort of loses its impression, but I think it's cool as hell. So, yeah. Well, not always. They're not always illiquid between brokerages. So a lot of times what they'll do, it just depends on what the position is. It's like when they did, if you're familiar with what they call them, mini options. I think they called them mini options. They don't really exist anymore, where they were doing fractions of an options contract. That became a little bit of a hassle to transfer back and forth, but because that was not a brokerage limited product, you could transfer it. So it depends on the position. There are times you can't transfer certain things, lesser known names and things like that, but otherwise we've done it before. All right, that's basically all I have for you. I guess I've answered the questions. It's back to work for me. Enjoy the rest of your day. If I helped you in some way, maybe hit the subscribe button. If you agree or disagree, leave a comment. That's cool. Just be nice. And we'll talk to you soon. See ya.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.